Now to Texas, the state driven by a strong energy-focused economy. It is suddenly now feeling the impact of oil prices that are now about half their year-ago levels, though up from their lows. Layoffs being announced at big energy firms, and if the unemployment rate rises, the Houston housing market could eventually feel a bit of a chill. Olick has more.
David Hopkins sold his Houston area home last fall for top dollar. He says he timed the market just right.
I feel really glad. I'm like that guy that sold his oil company last year. He's feeling pretty good right now too. I feel that same way.
Both home sales and prices hit record levels in Houston last year, fueled by a booming energy sector. With oil prices now cut in half, Houston is already losing jobs, the primary driver for housing.
Now that oil prices are down, things haven't completely changed, but let's just say that things have come to more of a stall.
It will take significant time for the drop in oil prices to trickle down to Houston's housing market. In previous oil downturns, it's taken 18 months to 2 years for the job losses to factor into home prices. But all eyes are on Houston now, with the oil industry accounting for about 5.6% of its jobs. This especially because it was the nation's hottest housing market barely a year ago and is still growing. Single-family Houston home sales jumped 6% in January from a year ago, and prices hit a record high, up 7% from a year ago. The only problem now is supply, barely 2.5 months due to all the demand. This as builders start to get careful. KB Home CEO last month said the builder had pulled out of a couple of land transactions in the fourth quarter because of, quote, sensitivity there. But they claim they are not seeing any pullback yet by consumers.
Because it hasn't been hit yet doesn't mean it's not going to happen. So I think patience is the buzzword. We're expecting that Houston will cool down significantly on the residential side.
Just for context, energy has really pushed housing recently. According to Trulia, in the 7 large metros where oil-related jobs are at least 2% of the total, home prices rose 10.5% year over year last year. That's a lot faster than the rest of the nation. Now, the reverse is in play. For Nightly Business Report, I'm Olick in Washington.